Welcome back to J-WIC FX online tutorial. Today we're going to the last phase of the smart money concept strategy, and that's the entry move. This is one of the most important parts. After analyzing everything you need to do, then the main things: how do I get into the market? After you get in market structure, you spotted out the zones, you spotted out liquidity and inducement. How do you enter? Okay, so now let's go to the chart. So today I'm going to be analyzing on gold, and if you've gone through our previous videos, you can clearly see that gold is on a bearish structure. By the way, I'm on 4 hours currently. That gold is on a bearish structure. This is the current high and our current low, obviously. So if you read the patterns, we've been on a bearish move. All right, so now I have 7 complete conditions or confirmations before going into any trade. 7 confirmations. First of them is, what's the directional bias? We can see that gold is already on a bearish, and the next things are these zones there. And when you spot out, you know how we spot out the zones, accumulations or range that will form a very good FVG. When you spot out those zones, are they inducement? Is there FVG there? All right, now when you can see these things, then you know you're getting somewhere. Let me use this last trade to explain. So we could see that we're on 4 hours, and markets, you can see this other block I set here, because there is a zone there. You can even see the bigger part of it here. All right, there is a zone here, and also here, the whole of this place, there is a zone. All right, so what happened now on our way to, because you have to wait for retracement after a very good break of structure. You can see that market retraced close to 61.8 of the Fibonacci to retracement and all of that. So what was I looking out for when the market got to this zone, the whole of this place? There's a zone there. Once you get the zone, first confirm, is the inducement? You can see this is inducement here. All right, if you watch our previous video where we discussed about liquidity and inducement, you know that inducement is that small pullback after that big impulse move, especially when there's a break of structure. Are you getting? Especially when there's a break of structure, it's just a small retracement that will now capture the eyes of who? Retail traders. You know, it's like the how does the market create this liquidity to capture people's mind? So most retail traders that want to sell here, all right, but might be taken out. So we spotted that the inducement. Does this inducement have fair value gap? Obviously, you can see this vacuum here. You can see the space which the market would likely want to complete. And that's not just all. Okay, you trade with confirmation, don't just rush, unless you want to be an aggressive trader. But when the market gets to your zone, there are other things you are going to look for. Now, you've waited so long for the retracement, waited for market to come and take this inducement that's gotten into that zone very well. Don't just enter, don't just jump in. All right, you don't just jump in. There are other things you will need to look for. Now, what is that? When the market gets into your zone, you wait for a change of character that also have a liquidity grab. Now, what do I mean? I'm on the 15, so you see we've dropped from the 4 hours down to the 15. Read the pullback structure. What do we have here? Break of structure, right? Under break of structure, yeah. Under break of structure, yep. Now the last break of structure, which is, say, put in 3 star. Now after that last break of structure, don't forget you're already in that zone where you want the market to react. The last low was taken. Are you getting? The last low was taken, so you now have your change of character. Now the market having that change of character, how do I spot that liquidity grab? So mostly, let me narrate this here. So 1, 2, 3, and what you want to see is a sweep of this high, which looks like a break of structure. Sometimes in lower time frame, you can also confirm from higher time frame how it's going to look like. Then take the last low. Obviously want the retracement to the downside. Now, so this small break of structure can be a liquidity grab on a small on a bigger time frame, can look like a break of structure on a smaller time frame. We'll confirm that sometimes both can be there, both can be presented as liquidity grab on both time frames. But the most important thing is that when this place is taken, wait for the market to break the last low, forming what? A change of character. This is how it looks like. Okay, so then once this is confirmed, once you have this in your zone, in the zone you've mapped out, just wait for retracement to probably around 61.8 retracement, or a very clean order block that might be there. There's any good order block that's there, you can then take entry. So let me explain when I was saying because now this is the break of structure on 15, right? It looks more like liquidity grab on 4 hours. Looks more like liquidity grab on 4 hours. Let's zoom this in so you see it. Can you see this? Can you see it? So on 15 looks like a break of structure, which is still okay because we are reading from internal structures from 15 minutes. Take that up and break down. This is where the confirmation comes in. Are you getting that? So on 4 hours looks more like liquidity grab. On change structure, wait for that fib retracement. Wait for that retracement. Okay, wait for the retracement. So this was around, you can see it, 61.8, which is still okay. This was in between 61.8 and 78.6 because you can look, there's a clean order block here. I guess, and this is a very good order block there, and that was how this trade was taken. So what are the main things there? Inducement. First of all, get the market direction. Very, very important. Get the direction of bias. Get the zone. Okay, that zone should have a fair value gap, should have inducement. Then once the market has pulled back to that zone, check for what you should be looking out for is the liquidity grab. All right, and will that liquidity grab cause a change of structure? Once you are able to spot this causing a change of structure, you know that, man, you're already good to go. Just wait for retracement or use a reasonable order block. All right, so now let's go to what we currently have on the market. If you should read the market structure, obviously this is a break of structure to the downside. Keep breaking structures to the downside. All right, there is under inducement here, spotted out here. Obviously you can see the fair value gap here as well. Okay, you can see the fair value gap here as well. Inducement taken and market breakdown. You can spot this again under inducement fair value gap. You can see this liquidity grab. I seen this very good liquidity grab, very good one. Now market tap into that order block and move down. So this is where the change of character is now. This is where the change of character is now to continue to the downside. So what do you want to, because this is now like a continuation trade, okay? So what do you now want to see? What do you now want to see here? The market has already changed character. You can see after this impulse move, there's a small pullback. There was also liquidity here. Now I see liquidity, or I can't FVG there. Okay, so market push down. This is not inducement. So you want the market to retrace back into this good order block. You can see this accumulation here. The market just ranged before it dished out. So that's a very good order block there. Or let's see what's our retracement going to say. Okay, in between 61.8 and 78.6 Fibonacci. That's a good spot to also take, and that's how it is. So I'll update you guys about this trade on YouTube Shorts. I'll do a video on the outcome of how it's going to look like. All right, whether it's going to play out well or not. As I trading is, you're having your plan, study yourself and all of that. So the same thing, we've studied this on a bearish move. Now the same thing happens to a bullish move. The same thing. All right, so the market is currently on a bullish run. Let's say this is a pullback. What do you want to see? Liquidity grab, right? Change the structure to the upside, retracement, and boom. Just keep it that simple. All right, keep it that simple. Mind you, these ones I'm saying they are usually the internal structure, so that would be around 15 minutes or your lower time frame you are using. Are you getting it? This is where the change of character happen. Just keep it that simple. Don't overdo things. Don't complicate things for yourself. Okay, so this is mostly when the market has gotten to your zone, when you already have your zone mapped out. Things you should look for to confirm your entry: there should be a liquidity grab, market change structure, or retraces back into a very good order block, or 61.8. Once you are around that 61.8 Fibonacci, you can still take the trade, then take action. So mostly, okay, where do you place your stop loss? I like placing my stop loss at the last high there, the last high, especially when the market pull back to an extreme order block. I usually like placing it at the last high to prevent I tell you, to prevent the market from trying to sweep you out. The market is moving in form of liquidity and going towards liquidity. So you can also see this. Now I gave a lot of space on this because, let me go to the 4 hours, so you can see this as well. Give a lot of space on this because it's just where the liquidity grab is, and taking my stop loss to around this point will be too much for me. So at least where that liquidity grab happened, market shouldn't retrace there. And this is where the order block is, and most people want to trim down to where this order block is. Quite dangerous for me, so let it just be there. Protect your capital, don't say you didn't tell yourself. So this is how it looks like. So it is like a continuation trade on gold. I'm going to update you guys. So that's it on entry modes. Just keep 7 is for completeness, okay? Just keep this around you. What's the directional bias? Do you understand the directional bias? If yes, all right, map out your zones where you can see the order blocks. Usually they are around, mostly are like 2 valid good zones in every new structures, breakup structures you get, right? Usually like 2. Okay, those zones should have fair value gaps. Those zones should form inducement or this mini pullback before continuations. That tends to capture the minds of retail traders and creating liquidity pool there. All right, go and watch liquidity and inducement video. You understand what I'm talking about? Then when the market gets to those zones, what do you want to notice there before you take action? And market has made a pullback to your zones, you want to see a liquidity grab that will form a change of character. It's that simple. Once you see that market has formed a change of character with a liquidity grab on your zone, just wait for a pullback, a retracement to 61.8 or a reasonable order block that's close to that place. Then take action. Don't make your analysis go to waste. Make sure you take action. So that's it for this video. Wish you all the best. So in trading, I've given you a whole roadmap on how you can use SMC strategy, but there is a whole lot of things one will still need to learn on trading. Okay, you need to master your mindset, the skills, your risk management. So mostly what we've done now is just the skill set, your strategy, how to do it, but there's the mindset aspect, the psychology. So you might have a good strategy, but you might not know how to manage your emotions, might not know how to manage your mindset. All right, so that's and then your risk management. You might also have a strategy, but you don't know how to manage your risk and all of that. So all those things need to be in check. You need to know what risk are you taking. You also need to know how to be patient enough to wait for your strategy to form out before you take action. Don't rush, don't jump into action without spotting out your strategy, without making your plans laid out. All right, so wish you all the best.